We're joined by Oliver Sloup. He is with Blue Line Futures in Chicago. And just all kinds of pressure. I mean, all kinds of pressure and everything but cotton when it comes to the crop markets here. Explain why the divergence there.
Well, we had a very bullish USDA report for cotton and a historic one for that matter. So I wouldn't be surprised to see the market continue to work higher, maybe be even limit again tomorrow. As far as the grains go, a little bit different story. We finished the week really strong, especially soybeans. It was a bit of a fundamental rejection. We had a bearish USDA report on Friday, and we sold off initially, but were able to rally and close in positive territory. Today, we're erasing those gains, and a lot of that pressure came in the overnight session after we got news out of China of slower than expected economic growth. And if you look across commodities as a whole, you can see that the majority of them have taken a big hit in those overnight hours. Crude oil was down about 5%, soybeans down over 3%, and now testing that 200-day moving average for soybeans. That comes in right about $13.95. If break and close below here, could potentially take the market back towards $13.49 to $13.56. This was the low from August 3rd, as well as a gap that is still open from July 26th.
Well, what do you see when you look at the wheat markets right now? They have been kind of trolling the bottom of the move for quite a while. Are you going to find support now or not, do you think?
Well, they've held pretty well, and I think they have found some support right around that psychologically significant $8 handle, give or take 20 cents. It's a relatively wide range historically, but when looking at the ranges over the last year, that's rather minute. We're trying to carve out a low, as I had mentioned. If we can defend the low end of that range near 760, I think the risk is probably to the upside. A break and close out above 840, I think gets us back out above that psychologically significant $9 handle, and that is the Chicago December wheat contract that I'm referencing there.
Well, as we look at that crude oil market, West Texas Intermediate crude, it has really been struggling. It's actually coming up a little bit from its earlier lows, but we're still down 360. We're at 88.51 per barrel on that September contract, and that has been providing all kinds of pressure, spillover pressure on the soy, oil, and corn market here today. Even now, it's getting in the neighborhood of $2 off of its earlier low. So a bit of a comeback, but still a sharp loss anyway.